What's going on, you guys? My name is Zach Hartley and welcome back to another weekly watch list video. In this series, my goal is to share with you how I feel about the market conditions as well as what stocks are at the top of my watch list going into the week ahead. So without any further ado, let's jump right in. Okay, so to understand the market, I like to look at the indices, and we're gonna start with the NASDAQ. And as you can see, we had a good week in the NASDAQ. We kind of bounced off support right here at 13,000. We even got as high as 14,500. On Thursday and Friday, we had a little bit of a pullback, but overall, it was a good week in the NASDAQ. We can see a very similar pattern on the S&P 500, kind of bouncing off support right here, pulling back a little bit on Thursday and Friday. And the Dow Jones, again, a very similar pattern here, but we have a very clear level of support right here at 34,000. This week that just passed, we bounced off it and again pulled back a little bit on Thursday and Friday, but the Dow Jones probably had the best week out of our three major indices. And so when we look at the market conditions, it's very clear to say that we are not in a free fall right now. We are still in a little bit of a pullback from our all-time highs, but the market has shown that we are basically sitting on a very clear level of support. And if earnings go well for the week ahead, I think this level of support is probably going to be our base. If we fall through this, that's going to be a major red flag. But as of right now, we've seen support step in and we've seen a nice little bounce. We've also seen a beautiful bounce in Bitcoin. If you look at this chart right here, you can see that Bitcoin is actually up like 10 to 15% just over the last sort of 2 days here, and it looks like we could be breaking out of this trend line that I have drawn. That would be a very positive sign. We're also coming close to testing our 50-day moving averages. Both of those are very good signs. The MACD is starting to move higher. The RSI has exited the oversold zone. We got a lot of positive signs with Bitcoin. If you use Monday, Tuesday as kind of a confirmation for a trend change here, and then you buy into it, I think that's a great opportunity as long as Monday and Tuesday go in the right direction. Now, when it comes to earnings, we have had some major companies report earnings so far, and it looks like most of them are doing really well. So for instance, Microsoft, Google, Apple, and Amazon, all four of these companies beat expectations. All four of their stocks saw a nice little bounce after earnings, and all four of these companies solidified why they're four of the best companies in the world. However, Facebook was the big story last week. Unfortunately, I bought into Facebook literally just a couple of days thinking that earnings was going to go well based on everything else that I had seen, and Facebook did not have a good earnings call. So they did have increasing revenue, but they had declining users, which is a huge red flag, especially when your entire business is based off the number of users that you have. So this was actually declining users quarter over quarter, the first time in history for Facebook, which is really just kind of not a good thing at all. Definitely a red flag in my mind. They also had lower net income and they had lower growth forecasts for the company. And so out of all five companies, the four companies here that beat expectations, they beat expectations and the stock rose for a reason, and Facebook stock fell for a reason, and it's right here. It's very plain to see. And it's a little bit disappointing because all the gains that I made here on especially Google and Amazon, they got wiped out by Facebook, and I basically walked out of the week break even, which it could have been a whole lot worse, but I definitely missed an opportunity and I should have waited a little bit longer on Facebook, but that's okay because we still have a big week of earnings ahead of us. As you can see here, we are quite literally kind of in the middle, maybe the back half of earnings, and we got some big companies reporting, starting with Chegg. This is a company I'm interested in. We got Pfizer reporting. We got Peloton reporting on Tuesday. I started looking into Digital Turbine a little bit. We got Walt Disney and Uber and Twilio all reporting on Wednesday after the bell. We got Coke and Pepsi literally reporting on Thursday at the exact same time before the bell opens. Affirm and Twitter after the bell, and then we got Under Armour on Friday. So it's going to be a very big week with regards to earnings, and we are not done earnings season just yet. Now, when it comes to my plan for the week, as you know, if you watch any of my videos, I was holding a ton of cash going into last week. I have started to redeploy that cash, and I bought all of my tier 1 companies, so Apple, Microsoft, Google, and Amazon. I did pretty well on a couple of these companies this week, but Facebook really took me down. That one hit me pretty hard, so I'm a little bit disappointed about that one. I haven't bought into Tesla, Adobe, or Costco yet. I do own some options in Coursera, and I have not bought into Arcit, Airbnb, or LICY yet, but we're going to talk about some of those in this video right now. If you want to see when I buy and sell, then you should definitely consider checking out my Discord chat. That is where I post all of my trades, all of my analysis, and I'm trying to build a community of traders to share their due diligence, share their research, and so that we're not all sitting at home alone. we're actually part of a community. So if you're interested in joining that community, it's $5 per month. The link is in the description down below. But let's now start talking about the stocks that I do want to buy this week. And the first one here is Coursera. Now, like I said, I do own some options in Coursera. I am very bullish on the company long term. However, in the short term, I have no idea what's happening because I thought Coursera was a pretty good deal at $30 and now it's at $20. So very clearly, the market disagreed with what I thought was fair for Coursera, but now I did buy into it. I got triggered on a stop loss for a small loss right here. Now I have an opportunity to buy into Coursera again cheaper. I've taken a small position in the options because we have earnings coming out on Thursday at 2 p.m. And I personally expect the earnings to go well. I think we're going to see a nice pop in the stock. So I bought a small position in options that have a huge upside, especially with the earnings here. And if earnings don't go well, then at least I didn't invest a whole lot of money into the stock, but at least this way I still get to capture that upside on this earnings event that is happening on Thursday, because I think this could be a major catalyst for the stock. It's currently down by 67% right now, and I personally think that Coursera has one of the best business models you can find out there. They have great revenue growth, excellent margins, and I love the company long term. So we'll see what happens, and full disclosure, I do own a position in it right now. Now, the next company that I really like here is Tencent, basically for technical reasons here, because as you can see, we have 1, 2, 3, 4, now 5 different tests where we have been rejected by this trend line. And basically you can see that every time we come up to this trend line, we get rejected, and we've come down to $53. What looks like one time right here in August, again right here in December, and maybe again right here at the beginning of January. Since then, we've moved up from $55 all the way to $62, $63 right here. And what I am watching for on Tencent is a breakout of 63. So if we see that breakout and the price starts to cross above our trend line right here and above our 50-day moving average, and we see increasing volume, I think that is going to be a very positive sign. It's going to be a great opportunity to buy into Tencent. The revenue is growing very nicely. I like the company, and they're down by 37%, even though this company has extremely steady revenue growth. I think with the whole China crackdown, it might be a little bit oversold. I think it could be an opportunity, but only if we see that breakout here. That's what I'm watching for this week. Now, the next company here is Unity Software. This is a company pretty heavily focused on video games as well as the metaverse. If you play any video games, there's a pretty good likelihood that that video game was built using Unity software. Their revenue is up 44% year over year. They're sort of becoming the industry standard here. And I think this company is going to do extremely well over the long term. They're in the video game space. They're in the metaverse space. They're on the software as a service side of it. I just think there's a lot of opportunity there, and I think the stock has major support around $90. We could see that step in several times here. We did dip down to $76 right here. So what I am watching for is I want to see $90 hold up. I want to buy in on the bounce off of $90 here. And if we break down below $90, I'm going to be looking to scoop up some shares around $75 to $77, depending on where that price falls to. If we fall below that, then stop loss, get out of it, save my money, and wait and buy back in lower. The financials of this company look great. They're growing extremely fast, and they're in a great space with a great business model. So I think overall, Unity is just a great company. Now, the next company here is Graphex Group Ltd. This is a company that I profiled, and I actually interviewed one of their guys probably about 8 months ago right now. His name was Daniel Nye, and he was one of the smartest gentlemen that I've ever had on this channel. So it was an absolute pleasure chatting with him. And now, as you can see, like back then, this stock had absolutely no volume at all. But just over the last 2 months here, the volume has significantly picked up. The price has moved from $1.50 to $3.81 right now. We are testing all-time highs. We're moving in the right direction. And Graphex Group Ltd produces graphite. They're one of the largest producers in the world, and graphite is one of the largest materials in electric vehicle batteries. And so this company is supplying the materials for electric vehicle batteries. I think they're going to do extremely well over time because they have a whole lot of plans to expand their production, and the industry that they are in and the customers they are providing the graphene for, they're exploding right now. So I just think there's a great opportunity here. I probably shouldn't use that analogy of exploding when we're talking about battery companies, but I really like the company, and I like the management team. They are based in China though, so them and Tencent are two Chinese companies, so definitely something to keep in mind there. Now, the last company, second last company actually here, is LICY. This is another kind of battery EV stock, But what these guys do is they take in all of the scrap materials from battery producers, as well as used lithium ion batteries. They basically shred them up, they convert them into the raw materials that went into those batteries, and then they sell them back to the battery manufacturers and the EV car companies. And so they can charge customers to recycle the batteries as well as sell the materials, and they make a markup on both sides. I absolutely love the business model. And what's crazy about this is that it was a SPAC deal that was originally valued at $10. It dropped down to $8, it ran up to $14, and now we're trading at like $7. I think it's at a discount. I love the business model. I love what they're doing. They're very well funded, and I think this is a great opportunity. I bought in on the way up and sold out on the way down, so I did extremely well on the first run, and I'm looking for a second run right now. Hopefully 634 is the bottom, and if this week we see a break of this trend line and we see the price start to move up, that's going to be my entry point. Now, the last company here is Hut 8 Mining. Like I showed you, Bitcoin is up like 10-15% in just the last few days, so I do want to give you an option to buy a stock that will give you exposure to Bitcoin, and the company that I like right now is Hut 8 Mining. Hut 8 Mining is really, really unique because it feels like the price of Hut 8 stock moves at like a 2x or 3x leverage ratio compared to the price of Bitcoin. So when Bitcoin goes up by 10%, it feels like Hut 8 goes up by 20%. When Bitcoin falls by 5%, it feels like Hut 8 falls by 10%. So it does move fairly dramatically. As you can see, we went from $4 to $20 in just a matter of a few months here. And we're back down now around $6 or $7 here, $8.26 actually at the moment. And so it's definitely fairly volatile, but if you think that Bitcoin's about to go up over the next little while and you don't want to deal with a wallet or you want exposure to a miner, then Hut 8 is probably my choice. I'm also going to try and interview somebody from Hut 8 on this channel in the next few days here. So if you're interested in seeing that, make sure you've clicked that like and subscribe button because it's going to be super interesting. I'm going to challenge them on a couple of questions. So I'm really looking forward to it. Now, in summary, here's how I feel. We had good earnings last week. Definitely Facebook kind of crapped to the bed, but Google, Amazon, Microsoft, Apple all put up extremely strong earnings. So Facebook was the outlier, and overall it was a good earnings week. Now, if this continues, like I said, we have a lot of earnings coming this week. So if this continues, I think we're probably going to see the market either trade sideways or trade bullishly because we have seen a nice little dip. However, let's say that Monday, Tuesday, all of these companies just report god-awful earnings, and then Disney comes out and has terrible earnings as well. In that case, I think we're going to see another little dip, probably another step down in the market, because that could be a little bit of a bad sign. I also think that we're going to see a lot more volatility around the March 15th to 16th time period. That is when the Federal Reserve is scheduled to meet next. And that's also when I think we're going to see an update on federal interest rates. And I think we're going to be going in the upwards direction, which could put some pressure on growth stocks. Now, if you want to see how those two are correlated, interest rates and growth stocks, I have made a video about it, so definitely check out my channel. But I do think come beginning of March, those first 2 weeks of March, I think we're going to see some volatility. Now, if you want to understand even more about how all this works and how to find your own stocks to invest in, then definitely check out my stock market course. It is completely free. It's hosted on Skillshare, and when you sign up with the link in the description down below, you get 2 weeks of free access to the entire site. It's pretty much the Netflix of courses, and you can take my 10-hour course that has over 11,000 students that have already gone through it. There's over 380 reviews for you to take a read through. There's over 1.6 million minutes of watch time. I promise you it'll be the best free resource that you can find online. It's hosted on Skillshare, link is down below, and it is completely free. Now, if you get any value out of this video and you want to see next week's watch list, remember to click that like and subscribe button, turn on that notification bell, and I will see you there. Good luck trading, good luck investing, and we'll talk to you soon.